सभी साथियों को मेरा प्यार भरा नमस्कार. Today we will be discussing the third mode of issue of debentures. Earlier for two methods we have gone through. The first one was issue of debenture against cash or bank. Second was issue of debenture other than cash. That means where you are not receiving any cash or bank check. I mean that we used to issue those debentures to vendors. This third one, in this video we have taken up this third method where it is said issue of debenture as a collateral security. So there is some technical words here, as you can see: collateral, security. One more words will be coming here, like mortgage. So this collateral and mortgage are some of the terms which are closely related to each other and usually used when it comes to the business of lending and borrowing. All right. So before getting into the topic, let's have a look about the meaning of collateral and mortgage. Usually this security, as you can see, collateral security, this security is of two types as per the topic: principal or prime security, and another one is your collateral security. Okay, so collateral is it's like a insurance policy, you can say. It's like an insurance policy because it gives the right to the bank from whom the person or individual is taking the loan. It gives the bank the right to recover the loan amount, okay, from the asset or any valuable thing against the non payment of loan. If the borrower fails to pay the loan, all right, then the security which is used as a collateral, the word collateral here means it's like an insurance policy where it gives the right to the bank to recover the loan amount plus interest, due interest, from the by selling or by using the asset in any way from where the money can be recovered. So this is somewhat the meaning of collateral. And another word which will be coming very soon in this topic, it's mortgage. So mortgage, you can say mortgage is type of a loan, okay, where you give any real estate or any valuable asset as a collateral, right, as a collateral. That collateral, as I said earlier, that collateral is sort of an insurance policy. So if you are giving any asset as a collateral to the bank, that again the bank gets the right, if in future by any means the borrower fails to pay the amount of loan, the bank has got the exclusive right to recover the loan plus due interest. So this is the basic difference between collateral security and mortgage. So let's start the topic. As you can see, the collateral security, usually security here we will be discussing in two types. First is prime or principal security and another one is your collateral security. So what is the principal or prime security? Loans taken are secured by the mortgage of the assets. That means whatever loans are taken, they are secured by mortgage of the assets. So mortgage, as we have already discussed, it's when you try to get a loan, okay, you have to mortgage the assets. You have to give valuable assets or equivalent value of the assets or higher than the amount of the loan, right, equivalent to the value of the loan or higher the amount of the loan, okay, uh, by giving a security as a collateral security to the bank. That gives the bank the exclusive right to recover the due interest amount or loan amount if by any means in future you fails to repay the loan amount. So usually company issue this debentures as a collateral security when the borrower, okay, borrower who wants the money, borrower is not in a position to give any other asset as a collateral security. You got my point? Company issued debenture as a collateral security when the borrower is not in a position to give any other asset as a collateral security. Now, when the loan is paid back, okay, the debentures issued as a collateral security are returned back to the company. These debentures do not carry any right till the time loan is being repaid. Alright, till the time loan is being repaid along with the interest due, and the lender has not demanded the loan to be repaid. Now, if in case the company fails to repay the loan, okay, as demanded by the lender may exercise its right towards debenture being issued as a collateral security. So, what is the accounting treatment? So, basically, we got two methods. The first method speaks about you do not pass any entry. So, when you do not pass any entry, then that type, under that method, the debentures are usually shown under secured loans. So, I have made a balance sheet here. Now, it depends whether you are issuing collateral security as a long term liability or a short term liability, right? So, if it is issued, it has been issued, if it in the case it has been issued as a long term liability, then it will be shown under equity and liabilities, under balance sheet, under the head in equities and liabilities, non current liabilities, long term borrowings. Okay, in the amount you have to fill. If the debentures are issued as a short term loans in the form of issued as a collateral security for a short term loans, in that case you have to show in as a under the same head equity and liabilities, current liabilities and short term borrowings. There is a difference, as you can see. If it has been issued for long term loan, then it has to be shown under, it is required to be shown under non current liabilities head. If it has been issued against the short term loans, in that case under current liabilities you have to show short term borrowing. So this is the first method. You do not have to pass entry, you just only have to show under the balance sheet. Now the second method speaks about when entry is passed, journal entry is passed. So what entry you have to pass? Debenture issued as a collateral security are recorded in the books. The entry is like debenture suspense account debited to the certain percent, whatever mentioned in the question, to debentures account. Now the thing you have to remember here, now when the loan is paid to the lender, this entry is cancelled by passing a reverse entry. Okay, so in the balance sheet the debentures issued as a collateral security are shown separately from other debentures. The only thing you have to remember here, if you are passing an entry, the entry will be debenture suspense account debited to the percent as mentioned in the question to debentures account. If the loan is paid, okay, to the lender, the above entry will be cancelled. How you gonna cancel this? Just by reversing the entry. That means this debenture account which has been credited will be debited, and this debenture suspense which has been debited now will be credited. Okay, for cancelling the entry. And in the balance sheet, how will be the debentures will be disclosed? The debenture issued as a collateral are shown separately from other debentures. This you have to remember. Now, debentures issued as a collateral security, okay, being for the loan of the company. Debentures issued as a collateral security are usually shown in the notes to account, in which loan secured by the debenture is shown. So this is the content regarding the issue of debentures as a collateral security. Usually you got security of two types: principal or prime security, or a collateral security. Which security is called prime security? When loans taken are secured by mortgage of the assets. And collateral security, now security given in addition to the prime or principal security, is known as a collateral security. Accounting treatment, we have got two methods. The first method speaks about you do not pass entry. If you're not passing entry, then in your balance sheet you have to show as per the term period of the loan mentioned. If it's a long term, then it will be shown under non-current liabilities head. If it is a short term, then it will be shown under current liabilities head. Now second method speaks about you have to pass entry. The entry will be debenture suspense account debit to percent as mentioned in the question to debentures account.